name is Derrick Weyrauch. I'm the president and CEO of GT Resources, Inc. We're an exploration stage company focused on copper, nickel, and PGMs, magmatic sulfides in Europe as well as in Canada.
Derrick, good to see you. Love seeing you in person because we spent a lot of time beforehand talking about what's going on out there. So we'll share some of that, but not all of that. We're here, Beaver Creek, packed.
It's pretty busy. There's a lot of people here.
Okay.
There's activity. I think there's a mixed.
Right people.
Where they're the right people. Well, I think the right people tend to be the ones that come with open checkbooks, and I don't think we've quite seen that throughout the junior mining space at this point in time.
It's interesting times, actually. You know, I think that the topic which we will get into talking about GT Resources in a second is the M&A activity. People are looking to that, quoting it, and hopes are pinned heavily on that. What's the reality of the situation out there with regards to this M&A?
I think there's a lot of conversation going on. You know, we've seen with, especially in the gold space, the prices escalated quite a bit. Majors have got great cash flow. Their share prices have responded, and there's probably some positioning they're doing to get a little bit bigger, and that's going to flow downhill. And we're not there yet in terms of the junior side of things, but I think there's a lot of conversations going on and people trying to figure out how to get to the next level.
Well, let's look at that flowing or cascading down of money, a money fountain into developers and explorers. There's usually a lag, so I don't think we should expect it to be happening immediately. And there's a few other sort of macro events, such as US elections, which may be affecting that decision making. But if we look at the type of mergers or acquisitions, however you want to frame it, JVs, and the size and scale of those are quite something at the moment. It was always going to come. Why do they keep leaving it until the highest possible gold price before they do this?
I don't know. I'm not sitting at that table to know that.
Right.
Last week might have been better in some cases, but it is what it is, right? If it's a good deal at that point in time, you still got to strike it. Right. Maybe it wasn't available last week.
Right. But there seems to be fewer and fewer deals to be done as well. I would say that.
I think it's more difficult.
Yeah.
If your share price hasn't re-rated with the escalation in the commodity prices, you're going to say I'm undervalued. I can't do a deal now, and not everybody will look on a relative basis and say 2 and 2 makes sense.
Right. So I think what we would say or share with the audience and readers of this is that the producers coming together, there'll be only so much of that can happen before they then start looking at the developers, and there's a kind of big slew of companies which are the right size and profile, and they'll be the beneficiaries of that. And our expectation is that cash or redistribution of cash will then flow down into the juniors. But until then, we're out of control, right?
I think that's absolutely right. What we are seeing is some of the majors starting to fund juniors. We're in a good example of that. We've got Glencore in supporting us. They've written checks, I think, 4 times over the last year and a half to support the company and allow us to do our exploration program. So we're seeing Teck do the same thing, Anglo and other companies. So there is an awareness that there has to be support for the exploration stage companies, but it's happening from the corporates right now. Yeah. For the most part, you're not having those high net worth individuals or family offices spending or investing quite the same amount of money they did previously. And we're still challenged, I think, from a retail investor perspective. There's a risk-off attitude based on all the uncertainty we're seeing in the world. So we're going to have a few more success stories before I think they come back to the table.
We do need some more success stories, but the complete opposite seems to be happening at the moment out there as well, I would say, which doesn't help the industry. It's not good advertisement for the industry, right? We're seeing the Victorias, the Ascots, the Pure Golds, the Marathons, the list goes on and on in terms of ways to damage shareholder value.
It's a tough business, right? I was just talking to somebody and we're saying, if you're a manufacturing company, it's pretty easy to set up a shop beside the highway or the rail line and, close to the big city. You don't have a lot of big issues. But if you happen to have a project where it's a bit of an infrastructure play and you got to build roads and camps, et cetera, there's complications that occur in the hinterland. So it's a tough business. It's not for everybody. So you got to back the guys that you believe and trust and take that risk.
Okay, one of the things that normally helps the industry is when the metal price rises, so do the equities. It ain't happening.
Well, we also have this thing that we've been talking about. It's called inflation. So the metal price has gone up. That's great, but I think people are sitting back and saying, well, what about your input costs?
What about margin?
What about margin, right? And with the inflation we've had, you think about it at a consumer level, it's really empowered labor to ask for more. And you were seeing this in organized labor as well in various countries right now. So I think it comes into that whole aspect of there's uncertainty right now. So why don't we hold back? And part of that uncertainty, quite frankly, is expectations on China, right? A lot of hope on that, but we've seen they're struggling. And that translates into, well, maybe I'll sit back and wait a little longer.
Unless you're producing antimony. I'm having a lovely time at the moment.
Exactly.
Right. So we're is addressing some of the macro things. Macro in the context of natural resources, macro in the sense of like world politics and economics. Then I think we should probably sort of jump into the metal thematics specifically. So you've got a bunch of different metals.
It's a polymetallic company.
Polymetallic company, green company, right? So PGMs and your coppers and your nickels. Let's just talk about the different thematics there. Has much changed, apart from pricing? Is much changed in terms of the demand into the future for any of those?
I think the expectations have changed.
Right.
A lot of people, if you go back, 18 months ago, 24 months and earlier, were saying, the electric vehicle is going to take over the world tomorrow. There's going to be this huge ramp up in demand for all these metals. I think people have realized that's not going to happen. There isn't sufficient supply, whether it's for the metals themselves or the power distribution to charge them, or people even having the ability.
The demand?
The demand, right? Why do I want to spend all that extra money for this versus that when, we talk about the price of groceries? So what I'm seeing, and I was actually quite pleasantly surprised here at the conference, a lot of the people I've been talking to have been inquiring and talking about the hybrid vehicle. And they see that as the future, the near-term future, if you will, that it's going to accelerate. But that means not only do you have a battery, you still have the internal combustion engine and the catalytic converter and the demand for the PGs. And I think that is a growing consensus and an expectation, I think, that you're going to see the PG prices show some strength in the not too distant future.
It's kind of interesting because the amount of contained metal in there is going to be probably more than either ICE or EV.
Yeah, well, you start peeling the onion, getting into the details, because in a hybrid vehicle you're not generating the same amount of heat. You tend to load more palladium, for example, into that catalytic converter, which is a great thing for fundamental demand, right? We haven't quite seen it translate into the market yet, but hopefully it'll come. At the same time, like I said, you've got that battery, so the copper and the nickel, etc., is still going to be required.
Okay, and in terms of that we talked about the influence of China and the market expectations of them or not. The US and Europe's infrastructure promises, etc. I'm talking and addressing specifically your copper and copper projects more broadly. There's not a lot of them. I just want to start with that. And the smaller ones do need funding. There doesn't need a recognition of that word, what critical metals or critical minerals actually means. How do you sort of see companies like yourself starting to attract some? You've got the Glencores in there, but we need more of this copper. Has it got to be through industry? Do you think the investment sector will kind of cotton on there's money to be made in them there hills?
I think that's right. A lot of the conversations that are going on are, talking about allocation of capital. So yes, it's been absolutely fantastic if you're an AI or an NVIDIA or something along those lines.
Yeah.
But how sustainable is that is the question. So the conversation becomes, perhaps I don't really believe it's going to continue, and there's more opportunity in fundamental assets that are required for civilization. So you're getting back down into buying things that are tangible. What's part of that? It's the materials complex.
Okay, and I promised I wouldn't bring this in, but you can make me think. But the other conversation I'm hearing a lot about at this conference is shorting. Okay. I know we're meant to be talking about your company, but you've got good, strong views. And I think these subjects that we're talking about should influence people's thinking about how they invest, okay? And I like intelligent commentary on them from you. So shorting, most CEOs are convinced there's algorithms out there which are shorting the heck out of their business. Every time they put out a bit of good news, or you think it would be good news or a catalyst, stock price goes down. There's a downward pressure, there's an increase in selling, and it's pushed down. Do you subscribe to that, or do you think it's more nuanced than that? I mean,
initially I didn't think I thought it was there, but how robust is it? I'm not quite sure. So I actually spent some time earlier this year, basically on the screen, looking at each order as it's going through the TSXV, right? What house is trading? Are they up, down? How is that? And I do believe it exists. And there's certain banks that I believe they've got their algorithms going. And on the companies I was looking at, because I looked at about 3 companies just to see what was going on, to get a better understanding. 1 a Canadian bank and 2 in the U.S.
Oh, very specific.
Oh, yeah.
Does one of them begin with C?
It's not going there.
Okay. But there's this thing about, they register themselves as market makers, and perhaps then become exempt, and there doesn't need to be a paper trail, and the self-regulation. And I think for banking, that's, having worked in banking, I think it's an extremely dangerous thing. But what do companies like yourself do if you believe what you believe, and you've done some research there, and there's guys like Terry Lynch and others making overture. Well, I think they've tried the education route, they've tried the be nice route, and I think the next thing is we're going to embarrass the hell out of you route, which is that's what it needs.
Yeah, that's quite possible, because the other 2 haven't been really well adopted or received, right?
Easy to ignore.
I think it's easier to ignore it and not act. If there's embarrassment, perhaps it'll work.
Okay, sorry to bring that subject up, but I just think it's, like I say, I always appreciate intelligent commentary. Back to you, right? You're in the enviable position compared to most juniors and junior explorers of not only having a polymetallic approach to your portfolio, but actually having cash. You can't just sit on it, can you?
No, I absolutely can't. But you also can't spend it all.
Right.
That's the balancing act.
Yeah.
It's very easy to go and spend the money, but in this environment right now, are you going to be able to replace it? And cover your basic overhead costs that you have to do. So you manage that very prudently. And we've been, I'll call husbanding our cash for probably about 18 months, 24 months at this point in time, with a view to, protect ourselves and be very tactful with regards to our exploration program. So, for example, we've got a project we think is a tremendous amount of opportunity that's in Finland that is untouched.
It is.
Right. It's going to take us probably $4 or $5 million to really hit that thing on the first pass. But, that's a higher risk proposition. Why would you take that risk unless you're 100% confident that the market is going to respond favorably? And there's been very few stories over the last year where there's been a serious success where the share price has increased
handful.
Right. And so unless you've got that type of conviction, why take that risk? So, we this year we did a small structured financing. We raised $1.8 million through flow through. Glencore came in and took 100% of the back end of that financing. So we nice huge premium to market to mitigate dilution, but at 1.8, it's a lot lower than what we've done in prior years. And we've deployed that cash on a very tactful basis. We finished the program about a week and a half ago, and we'll have some news out shortly on it. And that's the Canlask project, the historic Falconbridge project, where we've got a really interesting nickel situation.
Yeah, and it's like Nickel's had a funny year, I think. Maybe a fun 12 months, not just this year. In terms of erratic kind of pricing and drivers of that. So, we've talked ad nauseum about China, Philippines, Indonesia, etc. And again, maybe some funny business going on with pricing out of China as well. We talked about. I guess it's like, do you spend your time and money on nickel if it's not getting the love and attention, or were you obliged to, rather than copper, which people seem to be fawning over and trying to get going?
Well, fortunately, in these magmatic sulfide deposits, you get both nickel, copper, and PGs, right? You get the whole suite. Each one's going to have a different ratio. So you're not 100% sure exactly what you're going to get, right? So yes, we made a decision that the funding was specifically for Canalask, targeting a project that is dominant in nickel, as far as we understand it at this stage. But, that's okay. It's a short-term decision. It's a long-term business to put a mine into operation. So nickel may be out of favor today, but, a year from now, 2 years from now, 3 years from now is when perhaps it matters more, because you're that much closer to, having a resource or development, or, depending on what stage you're advancing. You can't take a short-term view.
No, I mean, I'm a buyer of that. I'm a buyer of nickel.
But thank you for the segue to copper.
Yeah, I know.
Because, so we bought a company called Metalcorp last year, and it was a little bit of a situation where it was financing via M&A, but it came with a number of interesting assets from different perspectives. And we came to buy that company because we started looking at their copper asset in Ontario. It's called Weyrauch. It's around Fort Francis. It's west of Thunder Bay. Historic resource there, 1 million tons, but 1.2% copper. And with the slow permitting that we have on our nickel project in Ontario, Tycho, as well as to your comment, why nickel today when you've got something that's permitted, ready to explore more on in terms of copper. We'll be advancing that project as the next step. So you should expect to see us over the course of the balance of this year to start doing some geophysics there. We'll start off with borehole EM, some of the old platform holes, and working up that project for more work.
Good. I always enjoy this conversation. I could listen to you all day. Really good. I really enjoy these conversations. Sounds like things are moving. You're not sitting on your laurels at the moment, because a lot of people have to, but with the money you've got, you can move this thing forward. And I appreciate that.
You have to keep moving, otherwise you die.
You do die, and I think sometimes it's very hard for retail investors to understand that conservative attitude to money. I'd like conserving money, but you do have to spend it as well. So we look forward to drill results back in the next couple of weeks.
Imminently.
Okay.
We put rush orders in on the assay, so hopefully we'll get something back very soon.
Well,
thank you very much.
Call me when you do. Okay. Thank you.
Well,